Let's start to wrap up the global markets week, full of headlines around the FOMC raise, the GDP numbers from the US and the Eurozone, earnings, as well as Nigeria's central bank change of tack in the FX market. Joining me to trade the news is now with Uchenna Minnis, Global Markets Strategist and Managing Partner at Howard Minnis Asset Management. This is big news as far as the divestment is concerned. But let's start with the bigger picture. What impact on the broader market and the currencies do you see in particular with the latest Fed decisions, Uche?
Thank you, Boss. Thank you for having me. Basically, this is just, as I mentioned before, a situation between the Fed looking to start to taper or talk about tapering, at the same time looking to extend their accommodative policy, given the fact that they're exactly not sure that the inflationary pressure is a permanent worry or a permanent risk at the moment. So basically, that's what we're seeing at the moment, going as a result of the Fed's decision. What we are seeing in the equities market, we are seeing a bit of risk-off sentiment play into that space, given the fact that investors and market participants are looking at that possibility that tapering might actually come earlier than expected, really, and that has basically been the issues really as regards to the Federal Reserve and also how they are looking to influence the market on the basis of their accommodative monetary policy.
Yeah, here you got 2 days ago, the Fed chairman says there's no clear timeline on the tapering of his asset buying program. What would this mean in general for market behavior?
Yeah, it gives them that leeway really to be flexible with their monetary policy, and if you get to see Jerome Powell's idea of his comment session whenever the Fed minutes is being released, you'll see that he's sort of trying to play both sides against the center, and that's what we are seeing. Not looking to commit too much in terms of his vocabulary, so that you don't get that very swift response from market participants and investors, and that's basically what he has been doing for the past couple of months, given since the beginning and even before the pandemic kicked off. So it's just highlighting that, well, there is a talk of tapering, but right now it's open-ended. So investors don't literally aggressively front-run that risk to sort of start to move away or reallocate their portfolio as a result of his statement and comment.
Over the last 2 days, we've seen the US GDP and those across Europe, they've been released. Do you think this is any consideration for you as a strategist? Do you see it as a trading theme moving forward?
Yeah, I think we still need, there are too many moving parts right now as regards to downside risk at the moment. I think we still need to see this current quarter release and see how how global economies are faring. We're already getting some situations whereby the data variant is reported to be very, very highly transmissible, and that in itself can really change the whole narrative or the current, should I say, pathway in terms of how business and economic activities are looking to kick off. So if we have a variant that might change the narrative, really, we'll probably be going to a place whereby we're coming from COVID level, going back to that level in terms of lockdown and whatnot, or just high, should I say, intense restriction sort of to curb the transmission of this virus. So there are too many gray areas as regards to risk, and for us as analysts and strategists, we just need to be cautious in terms of how we allocate our portfolio.
Coming back home, what are you hearing on the ground, or what effect that traders, online FX traders, think the latest central bank action will have on the market?
It's quite clear, as you can see, given the fact that the current directive from the CBN that has significantly affected the naira against the dollar. We saw significant weakness in the naira as regards to that news, and you can see that uncertainty sort of just sends a very not so comfortable or optimistic signal to foreign portfolio and foreign direct investors, given the fact that it's really clear that the central bank, albeit trying to stabilize the market, but you see that the reactionary effect, the knee-jerk effect for market participants are really not exactly encouraging to foreign investors and for portfolio investors and direct investors. So we can see that that weakness. We're not exactly sure what the plan is exactly, because I think personally that the central bank in itself is underestimating the demand for USD at the moment, given when they take such decisions this way. So we're literally just looking at those moving parts, also.
Okay, Uchenna Minnis of Howard Minnis Asset Management, thank you for your time today. We appreciate it. Enjoy your weekend and see you next time.
Thank you for having me.